Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, before we start, let's go through the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Alright, before we dive into the charts and trading view, let's take a look at some of the key economic events that are lined up for this week. We've got employment data out of the US, so pay attention to US ADP employment report, which drops on 5th of June, as well as the non-farm payrolls on the 7th. And of course, we have the ECB releasing its monetary policy statement as well on the 6th of June. Right, so this is the calendar for Forex Factory for this week, highlighting the key news events from Monday to Friday. Right, take note, I'm on GMT time here. We've got a few things, other things going on as well. We've got ISM manufacturing PMI report that's out today. We've also got CPI inflation data out of Switzerland, Aussie GDP, of course the ADP non-farm payroll on Wednesday, as well as the Bank of Canada's overnight rate statement. And then on Thursday we have the ECB, and finally we wrap things up with the non-farm payrolls, right? So quite a few things going on here, but we'll just touch on the US labor market, and we'll touch on the ECB. Right, okay, starting off with the ECB, we can see at the previous meeting back in April, the ECB kept its main refinancing rate on hold at 4.5% for the fifth consecutive time. Back then in April, the ECB had become more confident and inflation is moving steadily towards the 2% target, but they also noted that domestic price pressures remain strong. Now, if we look at what happened last Friday, remember last Friday we had the flash CPI data for the Euro area for the month of May, and that showed an acceleration in inflationary pressures in the EU. Right, so on the left, I have the chart for headline CPI, and on the right, I have the core CPI, both on an annualized basis. As you can see here, it has both of these CPI levels, right, had been trending lower over the past 12 months, but now we've seen a re-acceleration in the month of May for both the headline and the core reading. Right, the headline reading accelerated from 2.4% to 2.6%, while the core accelerated from 2.7% to 2.9%. Now, with this rebound in prices, combined with a rebound in economic activity as well, right? When we look at GDP growth on a quarterly basis in the EU or in the Euro area, this region experienced a technical recession in the second half of 2023. So what's a technical recession? That basically means when we have 2 consecutive quarters of negative growth, right? Although it's quite minor, coming in at negative 0.1 in third and fourth quarter, but nonetheless, it was a technical recession. However, coming into 2024, we have seen economic activity rebound quite strongly in the first quarter of this year, and it also marked the strongest growth since the third quarter of 2022. So with inflation re-accelerating along with a rebound in economic activity, will the ECB move ahead with a rate cut, right? And it still waits to be seen, right? Although markets are forecasting a 25 basis point cut, that means a quarter of a percentage point rate cut. But because we see inflation re-accelerating last week, as well as economic activity rebounding overall, right? Maybe we might not see the ECB cut its rates at this upcoming meeting on Thursday. So take note of that. Although we have a consensus or market expectations of a rate cut for the ECB, but because we saw inflation re-accelerate last Friday, plus we see economic activity rebounding as well, maybe the ECB is going to hold back come Thursday. Now, moving over to US labor market, right? We've got labor figures out of the US. So we'll take a quick look at the ADP report, or rather the ADP employment change, as well as the non-farm payrolls, right? So as you can see here, job gains have been added quite steadily to the US labor market as reported by the ADP over the past 12 months. The 12-month average has been about 199,000, close to 200. Now, the reading for April came in at 192,000, not too bad, pretty close to the 12-month average. However, the forecast of May points to a reading of 175,000 jobs. I mean, jobs are still being added to the US labor market. That's great. But we can see that the rate of increases has started to slow down as well, right? And not only is it probably is going to slow down over the next couple of months, it is also starting to come in below its 12-month average as well. Right? Job growth is sort of starting to taper off. I mean, of course, we're not seeing job losses anytime soon, right? I don't expect to see job losses anytime soon, but we can see that the rate of growth or the rate of hiring has somewhat slowed down in the US when we look at the ADP report. Now, moving on to non-farm payrolls, this is going to be released on Friday, 12:30 p.m. GMT, along with the unemployment rate, and we can see that for the month of April, right, the last reading, which was for the month of April, showed the US adding 175,000 jobs, which was much lower than the estimate of 243,000. Right, this was also lower than the average monthly gain of 242,000 over the last 12 months. So take note, the 12-month average for non-farm payrolls has been 242,000, and last month's figure, April's figure, came in at 175,000, right, much lower than this average as well as the estimate as well. And you can see now the estimate for the month of May also points to a reading that's well below the average of 242,000. We're seeing an expected 185,000 jobs to be added to the US labor market. Right, once again, jobs are still going to be continuing to be added quite steadily to the market, but it's going to be at a slightly lower rate, right, or a slightly slower pace. And also, we can see unemployment rate has sort of averaged between 3.4% and 3.7% throughout 2022 and 2023. However, in this year, we have seen the unemployment rate spike, or not spike, but edge a little bit higher, going above 3.8%, right, and climbing up to 3.9%. So we are seeing a slight increase in the unemployment rate as well, while job growth is starting to slow for both non-farm payrolls and the ADP report. Now, should we see a weaker than expected employment report by the Bureau of Labor Statistics, right? The BLS, or the Bureau of Labor Statistics, is the government agency that releases the non-farm payrolls and unemployment rate data. If we see an overall weak report, right, we are quite likely to see the dollar come under pressure, right? So take note of that. If we see maybe unemployment rate unexpectedly edge higher to 4%, while we get another NFP miss, right? Remember, in April, we already had an NFP miss with 175,000 jobs being added instead of the 243 expected. So if we see another miss in non-farm payrolls while the unemployment rate edges higher, this is quite likely going to cause the dollar to come under heavy selling pressure, right? So take note of how we can prepare for the non-farm payrolls as well. All right, okay, now let's move on over to the charts and trading view and begin our analysis for today, right? Of course, we're going to start off with the dollar index, and I'm on the 4-hour daily time frame here. Right, so we can see it was a bit of a mixed performance, right, by the dollar index last week, right? On Monday and Tuesday, it sort of pulled back, right, on the initial part of the week, and then on the second half of Tuesday, on Wednesday, the dollar index rebounded very strongly. But then again, come Thursday and Friday, it pulled back in reverse and it reversed sharply to erase all the initial gains as well. So you can see it was a pretty mixed week for the dollar index. And when we look at it on the weekly time frame here, you can see here, right, it was pretty much a pretty volatile session as well, a pretty volatile week as well. Yeah. Now, back to the dollar index on the 4-hour time frame, right? So we can see here today, as markets reopen today, right, dollar index has found support at around 104.50 and has rebounded quite strongly, right? So you can see for most parts today it has continued to climb higher, right? So where I do see a potential resistance area could be at this pullback level here at 104.90, right? So with dollar index continue to rise higher, this is our next potential pivot point, right? This is our next potential pivot point where we could see the dollar index potentially stall around this level here at 104.89, right? As we see dollar index rising quite strongly for the first half of the day, it's quite likely it's going to continue rising as US markets come online, and where it could potentially stall could be around this level here, this pullback resistance at 104.89, which has been identified as the pivot. Now we can also draw Fibonacci retracement on this part of the chart here from this downward move from 30th of May down to the low here on the 31st of May, right? We can see that the 61.8% Fibonacci retracement aligns very well with the pullback resistance at 104.89. So let's keep that retracement 61.8%. And of course, the next resistance level for the dollar index is simply going to be the swing high resistance here that occurred on the 30th of May, right? You can see there's a swing high resistance here, and even we can argue here on 24th of May, dollar index came very close to this level at 105.18 before reversing to drop lower as well. So it's sort of like a multi-swing high resistance that has been in place since 24th of May. And if I pull it all the way back here as well, you can see that this is a pullback support level that took place on the 13th of May. So we have a sort of an overlap level with a multi-swing high resistance as well. Right, so this is how the first resistance has been identified, while the pivot is identified at this pullback resistance, which has the presence of a 61.8% Fibonacci retracement. Right, with regards to support, right, first support we can see here, dollar index finding nice support at 104.41. Right, it found support initially on 17th of May, 20th of May, and then once again here on 28th of May, making a nice swing low here. Right, we can see this is a nice swing low bounce that occurred on the 24th of May, or sorry, 28th of May, and then we can see it bouncing off this level once again last Friday, and of course earlier in the middle of May as well, right? So this is a pretty significant pullback support level which you're using to identify as the first support. So that's at 104.41. Right, so we see dollar index continuing to rise. So if you have any long dollar index positions for today, right, maybe since the Asia session you've decided to go long on the dollar index, right, you can then target your take profit level at this pivot here at 104.89, which is a pullback resistance that has the presence of a 61.8% Fibonacci retracement, right? So we could see potentially dollar index rise up towards this pivot here and maybe stall around this level and pull back a little bit as well, right? Right, so take note, the bias to the dollar index is to the upside for today, right? We see it rising quite strongly in the first half of Monday, and where I do see resistance is at this pullback resistance at 104.89, which has the presence of a 61.8% Fibonacci retracement. So once again, should you have any long dollar index positions, right, since the markets opened this morning, right, you can then identify a suitable take profit level at this pivot point here. All right, so these are the key levels for the dollar index on the 4-hour time frame. Let me see if there's anything else I should point out. Perhaps I can use a Fibonacci projection here. Let's try this out. This projection involves 3 points. So the first point is going to start from 28th of May. Second point goes to the 30th of May, and the last point goes down to the 31st of May. The key projection levels lie at 61%, 78.6%, and 100%. So once again here, we can see that the Fibonacci projection level at 61.8% aligns very well with the Fibonacci retracement at 61 as well. So this gives us a confluence of Fibonacci levels. So let's just keep 61.8% and adjust the labeling so that we can view both projection of both Fibonacci levels quite clearly. Right, so once again we have a Fibonacci projection and a Fibonacci retracement identifying a major resistance level here, which has been identified by the pivot at 104.89. So remember, long dollar index traders, take note, you can identify a nice suitable take profit level that's around the pivot point here. All right, then let's move on over to the euro. Right, if the dollar index is rising quite strongly, the euro is expected to fall as well. Right, this is what we're seeing here. Similarly, so once again, right, should you be short the euro, right, since this morning, right, maybe from about, if you've gone short on the euro from about 108.50, right, where I do see a pretty decent support level is here, right, price making a nice support level here. So there's a pivot, so the pivot has been identified at 1.0818. So that means any short euro traders can use this pivot level to identify your suitable take profit level for any short trades as well. So the short trade, your first take profit level can be identified at this pivot point at 1.0818. Now, looking at support, right, this is a pretty significant swing low that has taken place here on the 30th of May. So this is where the first major support for the euro sits, which is at 1.0796. 1 point, yeah. Right, we can see this is a very significant swing low support that took place last Thursday, and similarly, as price rebounded higher, it pulled back a little bit, and found support at 1.0819 and bounced higher once again. So this pivot point is also a strong pullback support level here. Right, we can also run a Fibonacci retracement starting from this swing low here on 30th of May going up to the high of last Friday. We can see that this pivot point also has the presence of a 61.8% Fibonacci retracement, so adding further significance to this support level here. So take note, right, any short euro traders, right, you can target your take profit level at around the pivot point of 1.0818, which also has the presence of a 61.8% Fibonacci retracement here. And of course, the first resistance for the euro is simply going to be this swing high here, right? It's a multi-swing high resistance that occurred here on the 28th of May as well as last Friday. Right, okay. We can also run another Fibonacci retracement. This one's slightly longer. Starting from here, this swing low on the 17th of April, going up to the swing high here on the 16th. Perhaps there's something that we can use to identify or to add further significance to the first support. Right, let's pull up all the fibs. Right, we can see there's a 38.2% Fibonacci retracement and aligns quite close to this swing low that occurred on 30th of May. So let's keep that retracement at 38.2% and highlight this as a zone. Right, yeah, this is a pretty strong support zone as well. Now, so should we see the euro fall towards the pivot here, it may find support and stage a small rebound, right? Stage a minor rebound. So take note, we may see the euro bounce of this level. Hence, that's why I say if you're a short euro trader, take note, this is a pretty good level to identify a suitable stop loss level for us, so to identify a suitable take profit level for any short trades that you may have. Right, okay, so this is for the euro, and also okay, we'll go down the list. We'll cover a couple more of the majors, move on over to the commodities and the indices, and of course, should you have any requests for any other currency pairs or commodities or the indices, please do drop your request in the chat box, and I'll be more than happy to go through the analysis with you. All right, let's cover another of the major. Let's cover dollar CAD, since we've got the BOC or Bank of Canada releasing its monetary policy statement on Wednesday. So let's look at this currency pair as well. Right, with the dollar index rising strongly today, we can also expect currency pairs like the dollar CAD to be rising as well. Right, so where I do see a potential pivot point is at this pullback resistance level here. Right, we can see here last Friday as the dollar CAD was pulling back quite sharply, it found support around 1.3663, 1.3663 briefly to retrace a little bit higher, but it ran into resistance around 1.3685 and then reversed sharply to drop once again or to resume the downtrend. So you can see here this is a pretty decent pullback resistance level, which I'm going to be using to identify as the pivot point. And not only that, if I were to run a Fibonacci retracement from this swing high on 30th of May going down to the swing low here on the 3rd of June, I believe there's a 61.8% Fibonacci that retracement that we can see, yes. So this pullback resistance here, which is the pivot, also has the presence of a 61.8% Fibonacci retracement. So I'll just highlight this as a zone. So potentially we could see dollar CAD stall around this region here. So once again, if you are a long dollar CAD trader, right, if you've been long dollar CAD since this morning, right, you can see here there's been a strong move up here for this currency pair. We can then target the pivot point and the 61.8% Fibonacci retracement. as a suitable take profit level for the long dollar CAD trade here. Take note, we use major resistance points to help us identify potential take profit levels for the long trades. Right, so anywhere around 1.3680 would be a good region or a good level to identify a take profit level for the long dollar CAD trades. Now, of course, if this is the pivot here, this pullback resistance, then the first major resistance for dollar CAD is simply going to be the swing high or this multi-swing high resistance that has been in place since 24th of May, 2 Fridays ago, right? So you can see dollar CAD making a swing high resistance on the 24th of May as well as on the 30th. All right, when we look at support, right, this is a very significant swing low support here that occurred on Monday, 3rd of June, or well, today, sorry, right? Yep, today. So that's where the first support for dollar CAD has been identified. All right, so once again, long dollar CAD traders should be using the pivot point and the 61.8% Fibonacci retracement to identify a suitable take profit level, right, for any long trades. We may see this currency pair potentially stall around this level here, right? It may not fall all the way down to the first support, but it could stall around the pivot point and maybe pull back slightly, right? So take note, this is probably a good level to identify a suitable take profit level here. Okay, right. Let's see what else. Dollar CAD, we did dollar index, we did the euro, dollar CAD. All right, then let's move on over to the commodities. Let's look at gold. Then we look at crude oil, and then look at a couple of the indices as well. All right, okay, looking at gold. Right, the ticker symbol is XAU USD. This is the symbol for spot gold prices. Right, so although we see dollar index rising quite strongly, right, we also see gold prices rising based on the latest candle as well, right? So there seems to be a little bit of positive correlation between these two asset classes. Remember, normally when the dollar is weak, gold prices are rising, and when the dollar is strong, gold prices are falling. So that means they share a negative correlation. But in this case, currently we are seeing both the current candles push higher as well, right? So there's a little bit of positive correlation between these two asset classes. Now, with that, we can see that um, there's a pretty decent support level here, right? We can see there's probably more downside action to gold, right? So I do see a pretty decent pivot level here at $2,307 per ounce. Right? We can see gold finding nice support here from the 8th of May till the 9th of May. I'm going to use this to identify maybe perhaps as a first support, sorry. And then as we see this current 4-hour candle rising, right? And should it continue to rise higher, I see a nice pullback resistance level at $2,348 per ounce, right? This pullback resistance has been in place since 30th of May, right? And this is a level that I'm going to use to identify as my pivot, right? We can also run a Fibonacci retracement starting from this swing high on the 20th of May going down to the low of the day. Let's pull up all the fibs. We can see that the pivot point, which is the pullback resistance, also has the presence of a 23.6% Fibonacci retracement, and at the same time, there's another pullback resistance that I see at $2,367 per ounce, which also has a Fibonacci retracement at 38.2%. Right, we can see here on 23rd of May, gold prices running the resistance, and then here on 28th of May, we can argue as well, gold did stall close to this region before reversing to drop lower. So that's where the first major resistance for gold has been identified, which has the presence of a 38.2% Fibonacci retracement. So let's just keep 23 and 38. Right, so if gold continues to rise higher here, it's quite likely it's going to stall around this level, this pullback resistance, which has been identified as the pivot, and pull back a little bit. Right, there's I think one more retracement that we can draw, this time from here, 3rd of May going up to the swing high on the 20th of May. Is there 78.6% that we could use? No, okay. Oh, yes, okay. Actually, we can see that gold has found support at exactly the 78.6% Fibonacci retracement level here. Right, so let's just highlight this as a whole. Right, this is a pretty significant support zone for gold prices. right? So it has bounced off at exactly the 78.6% Fibonacci retracement, and at the same time we have a nice pullback support just a little bit below at $2,307 per ounce. All right, okay. Then with that, let's move on over to uh, WTI oil, called crude oil. In this case, XTI USD is the instrument that tracks the WTI crude oil futures. So let's take a look at how this commodity has been trading. Right, so when we look at it on the daily time frame, right, last week uh, there was a tale of two halves, right? For crude oil last week, Monday and Tuesday, we saw a strong rebound in crude oil prices with WTI oil almost touching $81 per barrel by Wednesday, after which it reversed sharply and had three strong days of in the red, right? Three strong days of red. So we can see it was a mixed, very roller coaster price action for crude prices last week. And when you look at it on the weekly time frame as well, you can see crude prices have closed down for the second consecutive week in a row. Right, so with that, now let's move on over down to the 4-hour time frame and begin the analysis for today. Right, so with crude prices falling, right, you can see crude prices are falling. So it's quite, I see a strong support level at this swing low here at $76.70 per barrel. So that's where I see the pivot point to be. Right, this is the pivot point here. We may see crude prices stall around this level, so be aware of that. And also, it is also based on the 4-hour time frame, trading underneath or below this bearish trend line as well, or this descending trend line. So we would need to see, although we may see crude prices find support of this pivot here. However, to get that confirmation of a bullish reversal, we need to see a clean break above this descending trend line as well. Remember, we could see crude oil prices, WTI oil, find support around $76.70 per barrel, and then we would need to see it bounce and break through this descending trend line to get a clear indication that we have a reversal, bullish reversal on hand. Now, with regards to the support, we have to zoom out a little bit, and by zooming out a little bit here, we can see that back in mid of February and the end of February, price made like a double swing low here at $76.18. So this is where the first major support for WTI oil is going to be identified, right? So you can see here strong support swing low here on 15th of February and once again on the 26th. Right, now that we've identified the major pivot and all the major support and where the pivot is, where we're going to identify a suitable or where can we identify the first resistance, right? We can I see a pretty nice overlap level here at $77.79, right? We see previously WTI oil finding support here last Friday to retrace a little bit higher, and then today as well it has failed to break above 77.79 so far. So this is where I think the first resistance could lie or sit for crude oil. Right, at the same time, we're going to run a Fibonacci retracement from this swing high on the 29th of May, going down to this low here. I believe there might be a 23.6% Fibonacci retracement. Yep, we do see the 23% line up very well with this overlap resistance here. Right, so take note, we may see crude prices bounce off this pivot point here, but take note, it's also failed to break above this descending trend line for now, right? We failed to see a convincing break above this descending trend line. So should that happen this week, then it's quite likely we may see gold prices bounce higher from this point onwards. All right, okay. With that, then let's move on over to the indices. Right, so let's start with US 30. So we can see here based on a 4-hour time frame, right? Since 2 weeks ago, 20th of May, Dow Jones, right? US 30 is the instrument that tracks the Dow Jones futures. It made an all-time high at 40,095.71. Remember, this is the all-time high for Dow, or Dow futures rather. And then it's now pulled back, finding support last Friday at around 38,076.05. Right, it started off it's rebounded or it's bounced quite strongly today as markets reopened, right? We saw actually rather at last Friday's close, right? At last Friday's close, we saw US equity markets rebound quite strongly. It did continue, the momentum did continue as markets reopened this morning. However, we seeing it stall and pull back a little bit here, right? When you look at the 4-hour time frame, it does look like it has broken out of, okay, actually no, probably not yet. It's not actually broken out of this descending trend line, right? So US 30 is still sort of restricted by this descending trend lines. We've not seen a clean break above this level here, so take note, this is a good descending trend line to be aware of, right? We see it touching into running the resistance on 22nd of May and 23rd of May as well, and we can argue today as well it came quite close to this descending trend line once again before stalling and pulling back slightly, right? We can also run a Fibonacci retracement starting from this all-time high on 20th of May going down to the low of last Thursday, right? Let's pull up all the fibs, right? We can see that US 30 has run into resistance at exactly the 38.2% Fibonacci retracement, right? So this is the pivot point that I would like to highlight for today, right? It's a pivot point for today, and we can see that US 30 has made a bearish reaction of this level for now. Now, how far is this pullback gonna retreat? I'm not too sure, right? But let's see where. But I don't not see any other major support levels, right? The next major support level that I see is the swing low that occurred last Thursday, which is at 38,077, 38,077.26. If anything, maybe I would say there's a pretty decent intermediate overlap support here at 38,403. 403, we can see previously US 30 running the resistance here on 29th of April, after which it proceeded to function as support on the 3rd of May. So we have a nice overlap level here. I'll probably identify this as an intermediate support here. So we do see US 30 running into resistance at exactly 38.2%, which is the pivot point, and we may see it pull back a little bit, and it could find support. Perhaps if it were to pull back further, it could potentially find support around 38,403 as well, right? With regards to the first major resistance, we can see US 30 consolidating around this 50% Fibonacci retracement, right? Consolidating around 39,100 from 24th of May till the 28th of May. So this is a pretty decent, what was previously a pullback support level here could now potentially be resistance. So gonna identify the resistance at around this pullback level here. The first resistance is a pullback level that aligns close to the 50% Fibonacci retracement. So we're going to keep 50 and 38.2%. And also let's identify this as a zone. All right, great. Okay, so these are the key levels for US 30 on the 4-hour time frame, right? Let's see, yeah. So I think we need to see a clean break above this descending trend line to see a resumption of the bullish uptrend as well. But for now, it does look like it's trying to attempt to break out of this descending trend line, and that could take place over the next couple of days. Right, then let's look at US 500. And let's see, yes, okay. So similarly to the Dow, right, or US 30, US 500 tracks the S&P 500 futures, and it made its all-time high at 5,350.29. Right, so this is the all-time high for US 500, and the pivot for today has been identified at 5,339. Right, we can see similarly for the US 500, it has rebounded quite strongly since last Friday, and that bullish momentum looks to have continued into today as well, right? So should we see SP US 500 continuing to rise higher, it could run into resistance at this pivot point here, which is 5,339.76, which is a pullback resistance that aligns close to the all-time high. Right, with regards to support, right, we can see here, this is a pretty decent support level that has been in place since 11th of May, as US 500 was rising in the first half of May. It sort of found support here at 5,217 from 10th of May till the 14th of May before pushing higher as well. And then once again, as it it was pulling back. It did find support once more around this region last Friday before rebounding strong higher. So this is where the first support for US 500 has been identified. Right. We can also run the Fibonacci retracement starting from this swing low, 19th of April, going up to the all-time high. Let's see if there's any retracement levels that we could use. Potentially, no, there's nothing that lines up well with any of the levels we've identified, so that's fine. Do not force a Fibonacci retracement into your analysis should there not be any significant support or resistance levels to use, right? The Fibonacci retracement levels are going to work more, are going to function as a stronger resistance or support should we actually see it align very well with existing price action or with historical price action. All right, okay, with the US 500 making an all-time high here on the 23rd of May, how are we going to identify a potential resistance, right? How are we going to identify this potential resistance? The next potential resistance area, we can do that by running a Fibonacci retracement to find extension levels. So we're going to run a Fibonacci retracement from here, 1st of April, down to the swing low here on the 19th of April, and we're going to use the extension levels. The key extension levels lie at 127% and 161% that we see up here. So quite clearly 161% is way above where the index is currently trading, so we'll just keep 127% in the current analysis. And this is where the first resistance for US 500 will be identified. This is at 5,379.36. Right, so when any instrument is trading close to an all-time high and we're trying to find the next major resistance level, right, and we don't have any other price action to reference in the past, right? Remember, at this point here, we have nothing to reference from the past, like there's no overlap resistance, pullback resistance, or overlap, right? Or swing high rather. So in this case, we have to rely on Fibonacci tools, and in this particular case, we're using the extension at 137% to help us identify the next major resistance for US 500, which is at 5,379.45. Now we could see US 500 potentially stall around the pivot once again and make a small pullback, right? You can make a small pullback, and there's also, I would say, a pretty decent intermediate support at around here, right? This level here is pretty decent intermediate support level here as well. We can see a US 500 finding support here on 24th of May, and after when it broke under, running the resistance here or just underneath this level here at 30th of May as well. So this is another a pretty decent overlap level here, which we can use as a intermediate support. All right, okay, so these are the key levels for US 500. Right, okay, we've covered a few of the majors, commodities such as crude oil and gold. We've covered a couple of indices as well. Right, are there any requests for any other instruments? It could be any other currency pair, any other commodity major forex pair as well, or even single name stocks as well. Otherwise, I'll just cover, maybe if there's no requests, then we'll just cover the Aussie and Kiwi after this. All right, so looking at the Aussie, right, so since 2 Fridays ago, we can see sort of it's been ranging between these two levels. It's been ranging approximately between 66 cents and 66.73. Right, you can see double bottom here and a double top here as well. So nice range bound trading for the Aussie, and it looks like it's going to extend this range as well. Right, so with the US dollar coming up strong this week, we can expect the Aussie to fall further. Right, so let's see where this key support levels for the Aussie here. Right, I do see a pretty decent intermediate support level here. Right, the Aussie finding pretty decent support at 66.28 last Thursday and Friday before rebounding higher. Right, so this is potentially a pivot point here, and we could see the Aussie potentially find support here and then resume the uptrend as well. So take note, this is a pivot point for today, and the first major support for the Aussie is at this swing low here, or I can even pull it back as far as here, right? This multi-swing low that occurred on 24th of May and 30th of May, as well as this small pullback here that occurred on the 14th. So this is where the first major support for the Aussie has been identified, which is at pretty much 66 cents. Now, first resistance, right, is this swing high here, right? This multi-swing high here that occurred on 28th of May, as well as on 31st of May last Friday. So this is where the first major resistance for the Aussie sits at, and we may have a potential bounce for the Aussie of this pivot here. Right, there's a couple, I would say, okay, we got a couple of Fibonacci retracements that we can use as well. Let's start the first retracement from here. This swing low on the 19th of April, going up to this high on the 16th of May. Right, we see, nope, there's nothing that we can use. 38 is not really that close to where it is. Although I would say 38 is a pretty decent overlap support level as well. Right, we can see here the Aussie running the resistance at 65.79 on the 29th of April. After which it sort of consolidated around this level here on the 9th of May as well. So it's pretty decent overlap as well. And we can see the bottom of the spike touching the 38.2% Fibonacci retracement before bouncing higher again. So this retracement at 38.2% is something to take note of should we see further downside action for the Aussie. But for now, I don't see any use for any of the current retracement levels. So let's just get rid of it. And let's see if there's anything else that I could use. It's probably a projection we can use, right? Projection involves 3 points. So we'll start from point 1 here, 28th of May, going down to point 2 on the 30th of May and ending on 31st May. Right, the key projection levels lie at 61%, 78.6%, and 100%. So we can see that 78.6% Fibonacci projection aligns very well with the first support. So let's just keep that projection on and remove the rest. All right, okay, so these are the key levels for the Aussie for today. Right, then let's look at dollar yen. Right, dollar yen has been very interesting as well, right? We had intervention operations take place by the Bank of Japan in the first week of May, right? I forgot how much. I think they spent close to about, I can't remember the exact figure. Let me see. I think it's about 20 billion. How much did, okay, let me just do a quick check. Yeah, they spent almost about 23 billion US dollars to try and prop up the yen, right? So when the Bank of Japan intervenes in the open market in the current environment, they're actually selling their foreign reserves such as US treasuries and the US dollar, and then using the proceeds of that to buy back the yen from the open market. So when that happens, dollar yen is going to be subjected to strong downside moves, right? Very sharp moves to the downside here, and many long traders can get caught out unexpectedly, right? But the after since that first week of May, there's been no further action by the Bank of Japan, and because of that, we've seen dollar yen grind higher as well, right? So now this brings us back to close to where dollar yen was previously trading, right? Coming up to about 157, 158. Now, could we see another intervention measure operation take place, right? Maybe so, maybe not now. Maybe the Bank of Japan is still biding time, and should we see dollar yen move higher back up towards 158, 159, perhaps once again that's an area where we could see potential action by the Bank of Japan once more. But for now, it just looks like they're staying on the sidelines and waiting for things to evolve. All right, okay. Now with that, we can see dollar yen is pulling back, and I see a nice overlap level here at 156.58. Right, we can see dollar yen running the resistance here on 14th of May, and then again running a little bit of resistance on the 21st. After which this level proceeded to function as support. 23rd of May, 28th of May, and of course last Thursday and Friday as well. So this is a very significant overlap level here, and I'm going to use this overlap level to identify it as my pivot. Right, and we could see dollar yen potentially bounce off this level here and continue to grind higher. Right, so this pivot is a potential pullback support, which may help us identify a long entry for dollar yen for this week. Now, next resistance, right? We see the next major resistance for dollar yen coming in at this swing high here, which is on the 1st of May, Right, this is a significant resistance level at 157.95, and just highlight it as a zone as well, because we see dollar yen stalling at around 157.70 last Wednesday as well. Now, with regards to support, where could be the next support level? Right, this is a little bit tricky. Perhaps we can use a Fibonacci retracement to help us identify this level here. So we'll start from this swing low, 16th of May, going up to the high here on the 29th of May. Right, I think we can use the 50% Fibonacci retracement, where we see a nice little pullback occurring here on 17th to the 20th of May. Right, maybe this is the next support level that that is going to be quite significant. So we'll use the 50% Fibonacci retracement, where we also see a pretty decent pullback take place here on 17th of May to the 20th of May. All right, okay, let me see if there's anything else to point out up for dollar yen. No, otherwise no. Right, so you can see here since 2 Thursdays ago, dollar yen has been ranging approximately between 156.60 and 157.70, so about 110 pip range. And should it fall down towards this pivot level once again, it's quite likely to find support here and stage a minor rebound as well. So we may have a potential opportunity to go long on dollar yen once again at around this pivot point at 156.58. Right, before we end today's session, right, just going to quickly launch a poll, and truly appreciate it if you guys can give your feedback with regards to today's session as well. Right, and then we'll just go through the economic calendar for this week, and then we'll call it a wrap. Right, yeah, and then we just cover dollar index once more, take a quick look at the key levels for the dollar index, and then we'll wrap things up. All right, okay, so once again, dollar has opened quite strongly today. The dollar index has moved up quite strongly over the last or the first half of the day, climbing as high as 104.76 here. Now, should we see dollar index continuing to rise, right, I see a first major resistance at this pivot point at 104.89, which is the pullback resistance that took place last Friday, and it also has the presence of two Fibonacci levels. We have a Fibonacci retracement level at 61%, as well as a Fibonacci projection level also at 61.8%. First major resistance for dollar index is at 105.12. It's a combination of an overlap level with a multi-swing high resistance. Right, we can see dollar index running the resistance on the 24th of May and also last Thursday, multi-swing high resistance there, and we see it finding pretty decent support in mid-May as well. So this creates an overlap level with a multi-swing high resistance. First support is also like a pullback support with a swing low that took place on the 28th of May. Right, this is also a very significant level, which is at 104.41. All right, thanks very much for the feedback. Right, truly appreciate it, everyone. And okay, so this is the key levels for the dollar index, and we'll just wrap up today's session by looking at the key events for this week. Right, there's quite a few things going on. Right, we've got ISM manufacturing PMI, which drops today at 2 p.m. GMT. We've also got inflation data out of Switzerland tomorrow, along with Joel's job openings. We've got Aussie GDP data on Wednesday, together with US ADP non-farm payrolls, and of course we've got the Bank of Canada releasing its overnight rate as well, right? Where we are expected to see a rate cut take place, 25 basis point rate cut. So that's a quarter of a percentage point cut. So should that happen, the loonie or the Canadian dollar is likely to weaken. So that means we may see a potential bullish catalyst for dollar CAD come Wednesday. We've also got ISM services PMI on the same day. Then on Thursday, we've got the ECB releasing their monetary policy statement, followed by President Christine Lagarde's press conference at 12:45 p.m. GMT. ECB too is expected to cut their main refinancing rate from 4.5% to 4.25%. However, with inflation re-accelerating as seen in last Friday's figures, CPI figures or inflation figures, it's maybe quite likely the ECB may pause once again and not cut so soon, right? It'll be a bit foolish if they cut on Thursday and then they see another month of inflation accelerating as well. That would really, put a spanner in all in the works. And finally, we have the non-farm payrolls and unemployment rate and average hourly earnings that's going to be released by the Bureau of Labor Statistics on Friday, 12:30 p.m. GMT time. So take note, as we all know, non-farm payrolls are very volatile. It's a very volatile news event that injects a lot of high volatility across all major currency pairs as well as gold prices. All right, thanks everyone for tuning in to today's session. Do look out for all upcoming webinars by IC Markets. We have a combination of educational and live analysis for the rest of this week as well. And yeah, thank you for all for tuning in, and I wish you all the best in your trading journey. Right, take care and have a great trading week.